Well, welcome back to another episode of FinTech Walkabout, where we're interviewing interesting people from the realms of open banking. Joined today by a challenger in the personal loan space, Rob. Rob Pasco, founder and CEO of Plend. It'd be great if we could just get a quick intro from yourself.
Yeah, sure. So I'm Rob. I'm one of the co-founders of Plend. So Plend is a ethical consumer lender focused on scoring people or lending to people who don't have sort of data held on them by big credit bureaus and reference agencies, or they're invisible to the credit reference agencies. And we try to provide a much more affordable, longer-term solution to these people via Plend.
So a little bit of background on yourself before we kind of zoom in on open banking. Your tax services and advising before then moving into PE and credit. What's the journey? Tell us who's Rob. What's the background? Where have you come from?
Yeah, so I was a qualified accountant. Used to work in the city for EY and Deloitte. I did do some work on sort of wholesale credit and corporate credit structuring for kind of institutional markets, things like that behind the scenes. So nothing in the kind of consumer space, direct on the pointy end of lending. But my personal experience with credit was really terrible, really bad. So I moved over from New Zealand about 10 years ago. And like anyone who essentially is new to the country, has to build credit. Basically, you've got to get bad credit cards first. You've got to get the credit building products. You've got to gamify the score, the system, to get enough data on you so then you can then access a low-cost product. Normally a mortgage being the biggest ultimate goal for many people. But in my case, I unfortunately got some bad credit cards out that were very expensive and made some bad decisions in my early 20s, which resulted in me having sort of a black mark on my credit score, even though I was working sort of in the credit space, which is a bit ironic. Yeah. So, like anyone, I set up a credit startup about 2.5 years ago.
Yeah, like everybody does.
Like everyone does, yeah.
So how's that been kind of mentally, socially? What kind of mindset do you need to keep yourself in to, stay the course, as it were?
Yeah, it's a good question. It's definitely tons of ups and downs. I was very lucky early on to meet some amazing people who kind of galvanized the idea of Plend into reality. So my co-founder Jamie, he's our CTO. He's built the Plend score, we call it, which is our open banking-led credit score. And then Kevin, who's our head of risk, who has been lending in the industry for like 30 years plus. He built one of the first kind of screen scraping open banking products for a platform called Castlight, which was sold to Experian back in 2018. So the kind of expertise and the kind of know-how of both those guys really helped kind of bring this to reality and fruition. So I was sort of lucky to have a few of us sharing the journey, the ups and downs together, not just myself.
Fantastic. How have you felt that, or how has that journey helped or impacted you personally? Because it can be tough. And I always try and eke this out of founders, because we don't always get founders on the show. So yeah. It's not easy, right, all the time. Sometimes it's the highest of highs and the lowest of lows. What kind of mindset do you have to keep yourself in?
Yeah, it's a good question. I've gone through different variations where I've sort of tried to subdue it a lot. Especially in the early days, it was definitely a lot of ups and downs. And because I'm sure you're fully aware, the regulation in FinTech is so much more different than other industries. You can spend a lot of time banging your head trying to get the regulation over the line so you can then actually work with customers. Yeah. And that was some difficult times pre-launch. I think over time, though, as things get busier and you have got more obligations and people to sort of look after and boards to look up to and give updates to, it all kind of gets sort of lost to the side. So I try to not let the kind of downs get to me anymore, because there's just so much else going on. Definitely dwell on it for a little bit, and me and Jamie, my co-founder, we talk for a bit through any of the downs, but reality is within 20 minutes we're back onto it and onto the next thing.
Just got to find that kind of level.
Yeah, I'll be honest, I haven't cracked it. I'm sure there are ways of doing it, and I've heard some good ideas from other founders. I mean, I think holidays become a difficult one too, like when you're trying to balance that and getting away, and then you've got family commitments as well. So I think that I haven't cracked that side of it yet. Yeah, there's lots to learn.
Are you guys, what about the working from home dynamic? Because there's always, I don't know about you, for some investors or I don't know how to phrase this in a politically correct way. Some the older generations are used to being in the office all the time.
Yeah.
Have you faced that trouble at all of like, why aren't you in office? Like, why are you working from home?
It's a good question. I think it's like a common issue facing not just startups but other industries too. When I was in Deloitte, for example, they implemented like a complete work from anywhere policy,
Nice.
which was like radical for the time.
Yeah.
So I feel like the world is changing and everyone's changing together. It's not just FinTech pioneering or tech startups pioneering it, but yeah, I wouldn't say we're cracked at that. I feel like the whole kind of whether you're hybrid or the variation of being hybrid, it's difficult in some ways, especially when you're trying to build early culture. I haven't definitely worked out the best kind of set for that yet, but normally like 2 or 3 days a week is generally our kind of approach. And I'll be honest, it has been nice having an office and having a bit of kind of a community kind of vibe to it.
Yeah. I fully agree.
Yeah,
we're the same.
Yeah, yeah.
In a 2 or 3 times a week.
More than 20 minutes on a Zoom call, I feel like people lose interest. So
fully.
It only works for a small call. Anything longer than that, and when there's more than a couple of people, you're better doing a meeting in person. I find. But I haven't cracked that yet. A lot of things we're working on.
This
I think
could
a
get
lot of
political.
companies are in the same position. Look at the best system.
Well, the market. So let's talk wider market. The market is where it is. Let's put it that way. Not necessarily in a great place. Helping or hindering your case for Plend?
It's a good question. So we position ourselves as being like an ethical lender, but right now we're seeing enormous demand for our product, and for probably some of the wrong reasons. So a lot of people are trying to cut back on their kind of monthly costs.
Yeah.
They can't cut back on energy. They can't cut back on household bills or food costs. Those are all going up.
Actually, we can help them do that.
Oh, right. Sorry.
Yeah.
That's true. But credit is one of those few big obligations they could actually kind of refinance and find cheaper solutions. So a lot of people come to us for consolidation mainly, and they're kind of people have got large amounts of credit card debt, overdraft debt, and they're sort of applying for a kind of low-cost loan for Plend for about 10-12%. But you do get, unfortunately, some good cases of people doing that, people that probably don't need the credit as well. They're in situations where they are fully indebted, and there isn't really much else they can do apart from go on a debt management plan with a debt charity and try to restructure their debts as opposed to putting on more debt. So there's like a really fine line for us where, yes, we want to help people and give them low-cost credit, but not everyone should actually be borrowing at this time either. So it's a really difficult position to be in. So it's helping from a demand perspective, but we are very conscious that we've got to be very careful who we lend to. And the FCA and on top of everything else is putting a lot of pressure on lenders to be far more careful during this time because, credit card and loan applications are all going up. Buy now, pay later.
Yeah.
Demand is through the roof. So we're seeing a lot of credit demand out there. So commercially it looks great, but from an ethical standpoint, we have to be very careful.
Yeah, I think it's like a good third of people that end up using AppTap are on BNPL, and so it's there's something burgeoning there that we should.
It can be a useful tool, but can also be the sign of potential
issues.
Yeah, exactly. We have sort of regular kind of meetings internally trying to work this out, because that's the beauty of open banking, and what you guys see as well is you kind of get a fuller picture of what they're doing. And with a credit score, you would never have known. You would have just assumed, okay, they're this level, then we can lend to them or not lend to them. We get enough data to make a lending decision, but then we're like, okay, but actually they've loaded up a ton of buy now pay later recently. Is this really the right decision to be borrowing from us? So it's a constant kind of internal discussion around where the line sits.
Yeah.
And we're still learning where that sits as well, but we're trying to be at least as forward focused on it as possible.
Yeah, and ethical, right? So certified B Corp. What were the kind of driving factors behind that?
Yeah, I mean, from day one, we wanted to get that certification. So we actually baked into the articles from incorporation. We're very clear that this is, what we're trying to be is it's a first proper, real ethical lender in the space, and the first lender to actually achieve the certification as well, which is really important to us. But there's other things too. So we're also backed by Nationwide Building Society, by Fair by Design, a member of Responsible Finance. So B Corp only gets us so far, but actually there are other kind of standards or high standards that we're trying to hit in terms of being a responsible lender in the space.
Yeah.
And
how does that kind of has it helped your consumer communication? Kind of do people understand what B Corp means? Yeah.
I think to a certain degree, what I find is interesting is you get a group of people on sort of more the commercial side of things or the investor side of things who are either for it or against it. And what you find is you can quickly align yourself with the right partners a lot quicker. What I mean by this is some investors will see this and go, oh, you must be sacrificing kind of your margins, the model, and you go, okay, fine, we don't have to work together, that's fine.
Yeah.
That's your position.
It's qualified out.
We're not going to approach it that way. But then you find that a lot of investors who really like that and think actually this is trying to make a difference, and they are trying to be sustainable at a time when you could just lend as much as you wanted to because demand is so hot right now. So that's been really useful. And then also for partners too. So we're not necessarily B2B, but we have kind of brokered a few financing deals with other platforms where they provide products to their consumers and they want to use finance of some kind from Plend because it's more ethical, it's lower cost. And we can do big ticket. A good example of this is like solar panels and kind of home improvements. So these deals would not have come about unless we had an ethical positioning. They wouldn't have wanted to work with us. And the rates we offer mean there's an alignment with their product. So we can actually provide a real solution to their customers. So it's had a lot of benefits commercially and also from an investing standpoint, which we wouldn't say I was expecting, but it's made the discussions and the kind of alignment a lot easier.
Okay. Yeah, that's an interesting space to be in as well. I mean, this is something that probably lies quite close to our heart. You talk about saving money on energy. There's a long-term solution, and that's retrofitting solar and EVs and so on. So
fortunately, they're very expensive.
Exactly.
And also demand is really hot for solar right now as well. So even with the change in kind of the VATs and VAT rates and the grants, prices are going up for solar panels just recently. So even though overall they've come down, but it's a hot space.
Yeah. So let's kind of rewind a little bit, talk open banking. We obviously saw this massive transition from screen scraping into API first data collection or consumer-driven data collection. Kind of, how did that influence your decision in starting Plend? Because it sounds like you had your own, personal issues, let's say, or your personal experiences. Was there some serendipity in that, where you like, I'm going to build this thing anyway, regardless of open banking? What was the?
Yeah, I mean, if we were honest, I don't think we could have done it without open banking.
Okay.
It's made the customer journey a lot simpler, a lot cleaner. We can make decisions a lot easier, and it's easier to find people who've got sort of expertise in open banking as well. There's lots of AISP providers now in the UK, so you can actually pick up a good pool of talent. So I don't. Yeah, I mean, I'm sure we would have maybe done a variation of this, but it's really hard to do with open banking.
Yeah.
Because that data is so reliable in many ways. Even though the classification of it might be poor, you can rely that it's actually happened. It's real money that's gone in or out of the account, which is a nice kind of assurance you have. Whereas before, for credit applications, you would put your income on the actual application form, and as a lender, you have no idea if the income is actually real or not. So it makes lending a lot easier when you actually know what their actual salary is, as opposed to what the person's claiming.
I was going to touch on that a bit later, but the actual quality of data, how have you tackled that problem? Because
it's a big challenge.
Even today, right, we're writing our own algorithms for categorization of recurring transactions and so on, and the insights that come off the back of those. What was your approach to that? Did you go out to partners? Sounds like you've built a lot of it in-house.
Yeah, that's exactly right. So while the data is great because it's definitely genuine data that's happened, occurred. You're right, the classification or the categorization is really hard.
Yeah.
We looked at third parties. I suppose the problem with third parties really is they're trying to solve everyone's problems. And the insights that we would like to see are more around regular outgoings, buy now, pay later usage, regular stability of income, which not every provider was sort of doing or categorizing to a high degree, or they are kind of fluffing it a bit because they're selling a B2B solution. So we then decided to go build it in-house about 2 years ago, and that's been a mammoth exercise similar to you guys. We've got a team of 3 whose main job is basically just to enrich the data, classify it, find third-party data sets, then hopefully try to correlate and enrich as well. So it's a real challenge.
Yeah, it's the benchmarking we find pretty difficult as well.
Yeah.
Are we gonna sit down and go through transactions and say, I think this is, our algorithms have done it right?
Yeah.
So
Massively. That is a challenge. So it's a mix of that. We do a mix of that, and we do a mix of rules that we built in, set rules. So we have like income rules and things that are more regular that we'll build a set of algorithms around versus actually physically going and classifying line data. There's a lot, and that was a lot of the early days was purely. Well, we also acquired lists of like cafes and things like that and other data sets, but I suppose the problem is merchant ID data keeps changing regularly. Bank data keeps changing. New companies get launched, so it's sort of the challenge, but also some of the the IP of an open banking provider in the space is that we, the more data we get, the more intelligent we become, and we can offer better products.
The bigger the more defensible it is.
Yeah,
so open banking is kind of primarily broken down into two, AIS and PIS, account information and payment initiation. How do the two overlap for you? Have you looked at, because a lot of it is obviously account information services, how do payments play into the Plend proposition? Do they?
Yeah. So we sort of say internally we're kind of open banking mad. So we do AIS for the scoring, we do PIS for all the payments, and we also do like enhanced ID as well. So we take as much data as we can from the bank in terms of KYC data, because a big reliance on us is if someone's gone through and authenticated their bank account, you can be relatively sure who they are, because it's very hard to go to that level of protocol to actually log into your bank account and then apply for a product. Where with bureau data, you could always apply, also credit bureau data, you could always apply in someone else's name. As long as you knew their address, you could get a match and potentially take a loan out. So it's a big fraud risk. So that's been a massive plus for us. So fraud, payments, and account information are all massive wins that we get from open banking. And when VIP obviously is more established, we're looking at it with GoCardless right now, but we'll definitely be one of the first stoppers of that. We're jumping on as much innovation as we can.
We're all over it. We can't wait.
Yeah.
And I think it's
common.
Yeah,
common
it's
vibe
just
right now. When is it going to be finally fully accessible?
Well, we've got three of the big banks here.
Yeah, time to do it.
Yeah. But now, it should have been out already.
Yeah.
So we can have sat there. And I think that's the big qualm. We'll touch on this a little bit later. But our big qualm with open banking is just pace. Like we want to move fast, right? It's a classic kind of early stage startup
Massively.
issue. But it sounds like for you, credit scores are just broken. You talk on your website about going beyond the credit score. So that's all the things you've just talked about. What about the other side? You touched on it when we were speaking before this, but does open banking expose anyone who might have necessarily good credit?
Yeah, so there's sort of two main kind of benefits of open banking in terms of the risk side of things. So one is finding people who have poor scores or poor data points or invisible or thin files, but they've got great income. They're paying all their obligations on time, subscriptions, they're paying balance pay later on time. So they look at what we call a stable person, and that's a really, really good thing from a risk standpoint. The person's reliable, they're going to meet their obligations, therefore they're a good decision to lend to. The other thing, the second half that unearths is people who are sort of hiding something potentially from you when they're making an application. What I mean by this is you might have a very good credit score, but you might have data points on your banking information which is not quite as reliable as we'd like, i.e. you've missed subscription payments, or you've racked up a ton of gambling debts, for example. These are things that you couldn't get from the credit score or credit data, but are really helpful for us. And if someone comes to us, because we're a near prime lender, we're not the cheapest in the market, but we lend very low for the people we try to serve. If someone has a perfect credit score, generally we sort of
question that.
We do have a kind of a filtering rule or referral rule at that point where someone else has to actually manually look at it, because we call it kind of a dishonest click. Is this person really coming to you for the right reason? So you kind of pick out both sides. You're trying to basically the middle portion of people where they've got good data and they've got relatively good credit history. You're sort of lending to 100% of the time, and these kind of two kind of edge cases, you can sort of either one filter them out, or you can two support them with other cost solutions. So that's sort of the overall kind of market.
And it's an incredibly tough time for consumers, right? So AppTap's whole thing is trying to bring people clarity and control within their financial management experience. For you, you recently launched the financial inclusion report. Could you talk to that a little bit? Some of the headlines.
Yeah, definitely. And the focus of this report was an amazing piece of research. It was 4,500 interviews and 15 case studies across the UK, with the backing of Nationwide, Step Change, and a few other universities and debt charities. the focus for this was credit exclusion, so people's access to credit across the UK, and there was some real startling facts. The biggest one being, I think about half the people with existing credit obligations are struggling to repay them, full stop. This is the most recent data we have for this year. And also some pretty, I think we all sort of know this, but I think unfortunately the kind of sort of gender and ethnic kind of biases in credit as well are a lot clearer now than we thought before. And this is in a kind of post-COVID economy as well. So access to credit has got far worse, and on top of that, lenders sort of tightening their risk banding, especially in the prime space. A lot of banks are sort of being very careful, and therefore people who should have been getting low-cost credit sort of can't, and are going to kind of more high cost and short-term solutions.
How do you account for those kind of intrinsic biases that you find? Because, open banking data, I know how old you are, probably know your gender, probably infer your ethnic background. I don't think we actually pull that as a data point. But so how are you accounting for that?
Yeah, no, you're right. You're pulling a larger wealth of data.
Yeah.
The biggest thing we do internally at Plend is we made the decision very early on to hide any residential name data from any one risk, essentially. So when it has to be referred, because everything's automated internally on the score, but if it gets referred to someone, they never know who the person is and where they're from. Because one of the bigger biases is actually regional breakdown. So there's certain parts of the UK where the postcode that you apply from generally has a worst credit score, and that's partly to do with the ONS data. So unfortunately, a lot of the credit score is built up from statistics data. So that's normally out of date by a couple of years, and especially post-COVID, people have dispersed a lot more across the country in terms of incomes and things like that. So if you live in those kind of areas, you're going to get the worst chance of getting credit. So a big part of this was saying, okay, we don't really care where you live, we don't care what your name is, but we'll look at your income and we'll look at your outgoings. And that's sort of the core data that we need to make a decision on. So there will be biases that, intrinsically that we won't be able to solve completely, but a vast majority that we'll be able to wipe out. A good example of this is a lot of lenders don't lend, for example, in Northern Ireland, which is, I find, mad in some ways, but there's historical kind of biases there among what would happen in the past. And even when we made our first loans in Northern Ireland, I had a risk, was like, do you really want me doing this? Like, I would never do this ever in my previous roles. And like, you're kidding me? Like, this is a good risk. They're in a house, they've got good security, like they're paying their bills on time. Anywhere else in the UK, we would absolutely lend to this person. So I'm very glad to say we've got quite a lot of loans across the UK, quite equally distributed. But that's a big kind of bias we're trying to destroy.
So what about that education piece then? You said 50% of people are struggling. It's the same in energy, right? I think it's back in March, almost half the population said they struggle to pay their energy bills. Which ain't going to get any easier.
No.
So how do you manage that kind of consumer relationship, that conversation as you go?
It's a good question. I think the main thing for us, we didn't want to build something that was short-term or was like a facility that a customer could draw on. I think a lot of, especially my personal experience, but a lot of people that struggle with credit, it's generally when they've got like a credit card product or an overdraft product where they can actually constantly draw down on it, repay it and draw down on it. And it becomes a loan in itself because you're constantly using it. So that was the main thing from us. We were never going to offer a facility product. It was going to be a fixed product. You take it once, you repay it monthly, and that's it. There's no ability to draw down further funding. So that was sort of a key thing for us. But education's a really interesting one. We've looked at ourselves a few times and thought about providing educational tips and hints. A lot of lenders, you might notice that when they decline you, they'll say, look at your credit file, learn about your credit file, learn about how to gamify your credit score, use a credit builder.
Yeah.
But if the credit score is so wrong and so broken, why the hell would we want to gamify it anymore?
Yeah.
And our big ethos is, if you can afford it, we should be able to lend to you. You should be able to access it now. Why do you have to wait 2 or 3 years building bad credit, or using bad credit cards to build credit?
Yeah.
So I'm not overly personally a big believer in sort of pushing education down people's throats and sort of saying, improve your credit scores and say you do it. I feel like there has to be a lot more done from industry to improve access to products. And that's sort of what we're trying to do, is improve our access. Now we can offer partner deals and things that might be relevant to the customer. So we're really looking at what we call a declines journey. So if you can't get a loan at Plend, who could lend to you that's still ethical, or what else could you do? Or are you at an extreme point now you need to go to a debt management provider a debt charity. So it's sort of putting the customer, giving them more options than they need. I think that's sort of my focus, or our focus at Plend, not so much here's how you build up credit, because I don't feel the credit score is a relevant tool anymore.
Well, that seems like seems like a touch point for the financial management experience, whereas you sit kind of after that decision has been made from a consumer say, oh, I need to go get some financing. Have you thought about how you kind of eke into that, or is it just, focus on core product today and look at these kind of things in the future?
Yeah, massively. Like a big ethos of Plend is not to actually go out and acquire customers ourselves. Most of our customers come from referral partners, actually, who the customer's gone for a separate journey and then gets referred to us because we can offer them a deal at point of sale, point of application. So we're not like out there trying to acquire customers and saying, hey, get a loan, low cost.
Yeah.
Other partners are passing them to us. That's definitely the kind of the future of where we're seeing credit going. Customers aren't going to their bank anymore for credit. They're going to, personal management apps. They're going to point of sale. They're going to super apps to effectively find the best deal for them. And Plend is one of those providers, essentially, that built in the credit piece. Our expertise is around risk. It's not about building an app or creating a sticky solution. It's about writing a very, very good product at a low cost.
I think we could really spiral out on the topic of super apps, and I have like 8 questions listed here, but we are getting close to end of time. So just on the topic of super apps, right, the concept is bring all your data into one place. How does opening up, or does opening up other data points beyond kind of financial data, does that support what you're trying to do? Is that something you're interested in? How would you look at kind of leveraging stuff like your energy usage, that sort of stuff?
Yeah. It's probably in different ways as well. So a big part of it is journey. So how does the customer find our product? How do they go through our journey? So if a customer comes from a third party, generally the customer is more reliable. They've gone and researched the best deal. They're a bit more savvy financially. So we'd offer them normally a lower cost product, and then because they're more likely to repay it as well. So it's a good risk. If they come to us directly, we don't really advertise much externally because right now it's a difficult time to push credit on people. We might decline more people or offer a higher rate. It's slightly higher risk. You don't know where they've come from. If they come from point of sale and they've gone through a journey with a user, a good example of this is one of the solar panel providers we buy finance for. The customer has to physically install the item in their house before we give them finance. So there's a real positive journey there, other data points in the journey, which we say, okay, good, we can give you a lower cost solution for that particular problem. So we're always keen to kind of jump on that. So while the Plend score or the kind of open banking is very useful, it's good to know where the customers have come from. And that journey, the more touch points or friction there is in that journey, the kind of safer the loan becomes, the product becomes, especially if they sit within someone else's ecosystem. It's a massive benefit.
Risk. All about risk. Right?
It is, yeah.
Would you say the Gen Zs, late millennials, are more receptive to kind of opening up and sharing these data points, or have you seen any trends in that sense? Because
from our data points, we haven't lent to that many young people actually. I thought this was going to be a lot more popular with younger people, but actually, the biggest demographic we're helping right now are people in the sort of late 30s, quite secure incomes, many which actually have mortgages and own homes, just have a lot of debt to consolidate right now. That's sort of the first product we launched. We're still quite new, but I definitely want to go to other markets, and I think it will depend on the channels we use and who we're working with. So we're looking at working with 2 super apps at the moment, or super app-ish platforms. One that lends to works for frontline workers, and the other one that works with people who are sort of not self-employed but have contractor companies and things like that. So you'll get different demographics depending on the channel you sort of unlock, and then obviously the risk will be different depending on those characteristics.
Certainly. We are getting close to time, so a couple of quick fire ones. What do you think has been the biggest challenge for you, throughout the last couple of years running Plend? That's a
good question. I would say, and it's relevant only to my part of Plend, because I'm very much on the kind of external side and fundraising side. I think networking was one early challenge which I didn't grasp properly. I definitely didn't build connections and contacts the way I should have done. I was definitely very unconnected at the start, and that was a real challenge.
Tell me about it.
I think it's everyone's kind of thing, right?
Yeah.
And even after our last fundraising round, I sort of stopped talking to people, and that was a massive no-no. So I'm now more conscious to kind of keep contact with people, and just you never know where relationships go. Our chairman, who ended up being a core investor in Plend, he's another founder of another FinTech. I mean, we didn't go out to find him as an investor. He just basically loved the journey, and after 9 months, jumped on board. So I mean, it's a common story you have from other founders, but definitely something which I've taken to heart and gone, okay, I need to get good at networking.
Yeah.
So
tell me about it.
Yeah.
Came out of a biology degree at Imperial and was like, I need to suddenly have this FinTech network.
Yeah, you've got a great idea, but then
it
really does come down to who you know and who can link up to and things like that.
Yeah.
So yeah, 100% better.
We should probably do another episode at this point, given the number of questions I have left. The big one I always like to ask: open banking, success or failure?
Yeah, massive success. I mean, to get the infrastructure in place in the first place, whether the adoption has moved as fast as it should have done, I think it comes down to user cases. We don't go and scream at open banking to customers. Customers don't care about open banking; they care about a journey. Is the journey seamless, and are they getting the best experience possible?
My next question.
Oh, is it? Okay, fine.
Yeah.
Well,
No, it's perfect. Like, does it matter?
Yeah. Well, exactly.
Like, who cares if I know as a consumer what open banking is, as long as it's the end result, right? You don't go to Amazon to pay for something. You go to Amazon to buy a, for-year pair of socks. Or
I saw a lot of people saying, like, who cares about Web3 or DeFi? The consumers just want the best product, the best offer, and if that means there's a blockchain element to it, fine.
Yeah,
that's great. So same thing with open banking. It's a fantastic infrastructure, and the UK is doing some fantastic work in it. So maybe not moving as fast as we want it to, but it's definitely a lot further ahead than other jurisdictions.
Yeah.
And hopefully it becomes a sort of smart data right in the future where, there's basically the ability of the customer to share more than just banking data, but a whole raft of data with, to get the best product possible.
That's what we're hoping for. And that's what we're working towards. So last 30 seconds, minute, what comes next for Plend, and where can people find you?
Yeah, so the big thing for us is launching with more partners. So I mentioned these two super apps that we're launching kind of a credit solution with them. The plan is to launch about 8 different kind of major partner lending solutions soon. By the end of next year at least, that's the kind of internal deadline. And to really kind of grow Plend to being, I think, the kind of, not just the ethical lender in the space, but being the kind of trusted credit partner of many platforms out there. People who want to embed credit into their flow or to their consumers, they can go with us because we're guaranteed to be affordable and treat their customers properly. We accept more people than other platforms will, and therefore you're going to get the best deal for your consumers. What was the question, sorry?
Where can we find you? If people want to search Plend, get in touch.
We've got a website, plend.co.uk, but that's the consumer-facing piece. We're also quite big on social media, and we work with other partners. We're sort of nestled into other flows.
Cool.
So
find you out there somewhere.
Keep
your eyes peeled.
My hope is, in the future, you take out credit, you wouldn't even know it's Plend. That's really the ultimate aim here. Is not to be, as I said, not to be a super app. Everyone else is good at that. They're doing, working on owning the customer and
the enabler. Yeah.
Absolutely, we want to be that trusted partner plugged in behind the scenes that no one sees, but does all the heavy lifting.
Perfect. Great. Well, Rob, a pleasure. Thanks for coming down, and thank you for watching. And we'll see you next time on the next episode of FinTech Walkabout.